Hello and welcome to Morningstar. I'm Emma Wall, and joining me today to give his 3 stock picks is Dan Harlow, manager of the AXA Framlington American Growth Fund. Hi, Dan.
Morning.
So what's the first stock today?
First stock today is a company called O'Reilly Auto Parts. They are, as the name would suggest, a retailer of auto parts in the US. They have over 4,000 stores.
And an auto is quite often an indicator of how the US economy is doing. And, you know, when the US economy is doing well, auto does well. Has that been reflected in this stock?
Well, it's benefiting at the moment from a marked increase in miles driven in the US. So a function of very strong employment numbers, more people commuting, driving to work. And also the much lower gasoline prices we're seeing in the US, a clear function of the lower oil price, meaning that Americans are spending more time in their cars. This August, miles driven was up 3.5% year on year, which is a pretty significant increase. So we're now at pre-recession highs, and the more you use your car, the more you're going to need to replace the parts. So there's a nice tailwind to the industry at the moment that O'Reilly are benefiting from.
Does that mean that they're overly sensitive to the US economy? Because there are some rumours this year that as the rates rise in the US, actually the economy may feel a negative effect. Will you see that in this stock?
We don't think we will. What this company is sensitive to are the number of cars on the roads, the age of that fleet. And while the retail sales, the auto SAAR number has been at a record level in 2015, there is still a very aged fleet of cars on the streets of the US. So it's a fragmented industry. It's a $140 billion industry, and O'Reilly have sales of about $8 billion. So they have big share opportunities.
And what's the second stock today?
The second stock is a biotech company called Celgene, which is a relatively mature biotech company in that it has very substantial free cash flow. It has a very balanced mix between products on the market today and pipeline. Its largest drug is called Revlimid, which is for the treatment of blood cancers. That's growing mid-teens year on year, and the company is looking to expand the label into new indications and into new geographies.
And how has that done? Because biotech became a bit of a buzzword. It was almost rumours of another tech bubble a couple of years ago, as it was the sector on everyone's lips. It did incredibly well, 2013, 14. And then, of course, this year, it's actually, or recently rather, it's come off a bit, hasn't it? Has that been reflected in this share price?
It has. So the price has sold off from a high last summer of about $130 to about $100 today. Fundamentally, nothing has changed for Celgene. They have very clear vision on their numbers. They're looking to grow earnings 20% a year through to 2020. That doesn't factor in pipeline. That's a function of product releases and
so guaranteed cash. Right?
Well, they're very confident on, and we think they can be beaten. But there are broader concerns in the industry around pricing. It's a very emotive subject, very controversial subject, and in an election year, it's something that could well be given closer scrutiny. However, we feel that innovative companies like Celgene that are investing heavily in their pipeline in research and development can justify the prices for the drugs that they achieve, and feel that the sell-off is presenting some opportunity.
And what's the third and final stock?
The third name is Electronic Arts, which is a computer games producer.
EA Games, I think a lot of people will have seen it across the bottom of their...
EA Sports, yeah. Exactly. They're most famed and most known for their FIFA franchise, which released and updated every year. Similarly, they've got a very strong NFL franchise, American football franchise. And most recently, they've launched the Star Wars Battlefront game.
Well, then leaping on the back of very topical things, but this is a very competitive market, isn't it? And one that constantly innovates. I mean, if we think back to what maybe my generation, the first video games that they played, you stuck a cassette in the top of a machine, and now a lot of it is online. Are they at the forefront of that innovation?
I think you've hit the nail on the head in terms of identifying one of the key issues for the company at the moment. There is a game cycle going on. There's been big investment in the new Xbox, new PlayStation, which is helping the business. But what is most exciting is the secular margin opportunity for this company as people digitally download their games rather than buy from the bricks and mortar store. As they're able to cut out the retailer, they're able to retain a greater level of margin, and also the used game business, the second-hand game business will gradually shrink, which is an advantage to EA, who will hopefully in time be able to sell more new games. And digital downloads are at the low 20% at the moment for consoles compared to PC, which is nearer 75%. So we think there's really interesting margin opportunity there.
Dan, thank you very much.
Pleasure.
This is Emma Wall for Morningstar. Thank you for watching.